The IRS doesn't pick returns randomly. Most selection is risk-based. They're looking for returns where the dollars are big, the issues are common, and the facts look unusual compared to similar taxpayers. On the EA exam, expect questions that ask, which fact pattern is most likely to be examined? Your job is to recognize the main selection pipelines: computer scoring, information matching, related exams, and third-party leads. One major pipeline is computer scoring, often called the DIF score, discriminant inventory function. After processing, the IRS assigns a numeric score to many returns. Higher score means higher audit potential, not guilty. Think big Schedule C activity, high deductions relative to income, or lots of credits with little taxable income. A classic exam setup is large credits, low income, and the return gets pulled even if it's correct. Here's what that looks like in real life. A taxpayer can be selected because the return looks too good statistically. For example, a client with very low taxable income but multiple refundable credits might get examined. If the credits are legitimate, the audit can still close as no change. That's an EA exam favorite. Selection doesn't mean the IRS will win. It means the IRS wants proof. Another huge pipeline is information matching. The IRS matches what you reported to what third parties reported: W-2s, 1099s, and other information returns. When something doesn't match, you often see a CP 2000 notice proposing changes. On the exam, remember, CP 2000 is typically a matching notice, not a full-blown field audit. And mismatches can be innocent, like identity theft using someone's social security number. Returns also get selected through related examinations. If the IRS audits a partnership, investor, or business partner, they may expand to connected taxpayers with the same transaction or issue. This is why one audit can ripple outward. On the EA exam, watch for language like partner, investor, or same deal. That's your clue that the selection method is a related exam, not DIF or matching. Finally, third-party information can trigger an exam or even a criminal investigation. Tips can come from law enforcement, public records, or individuals. The IRS evaluates reliability before using it. If the facts suggest unreported income tied to illegal activity, the case can shift fast. And here's the exam-worthy twist. When there's a pending criminal investigation, the IRS isn't required to give notice before contacting other agencies like the FBI or DOJ. One more practical tool to know: audit reconsideration. If the IRS assessed tax after an exam and the taxpayer disagrees and now has new information or never got the notices, there's a process to ask the IRS to re-look at the audit. On the EA exam, this shows up with facts like moved, didn't receive mail, or found receipts after the audit. That's your audit reconsideration trigger. Derek moved to a different city but didn't forward his mail. The IRS sent several notices, but he never received them. The IRS assessed an additional $23,000 in tax on his prior year return, but Derek doesn't believe he owes it, and he has proof. What can Derek do? Options include audit reconsideration, a new assessment due to hardship, a protest with the taxpayer advocate, or requesting a new audit. Think about it. Think about it. The best answer is audit reconsideration. That's the IRS process for re-reviewing an audit assessment when the taxpayer disagrees and has additional information, especially when they didn't receive the audit mail due to a move. A tempting wrong choice is request a new audit, but that's not the standard remedy. You're asking the IRS to reconsider the existing assessment using the new proof. Mateo's individual return is under IRS examination. 5 months before the statute of limitations expires, the revenue agent wants Mateo to agree to extend the statute. Which statement is true? Possibilities include: the agent must explain Mateo can refuse, and that an extension can be limited to certain issues. Mateo can't refuse. Refusing sends the case straight to tax court, or extending requires a formal protest to Treasury. Think about it. The correct statement is that the agent must advise Mateo he can refuse to extend the statute, and if he agrees, the extension can be restricted to particular issues. That's a key exam point. Extensions are generally voluntary, and they can be limited in scope. A tempting wrong answer is the idea that refusing means immediate tax court. That's not automatic. Refusing may push the IRS to act faster, but it doesn't force court.